So welcome back to Dapp University. So today we're going to take a look at a lot of stuff that's been happening in the crypto space. We've seen a ton of updates come out since our live stream yesterday. It seems like the space changes at such a rapid pace. It's crazy how much there is to talk about every single day, Monday through Friday, when I get up here to do these live streams. And one of the first things I'm sure that's on everybody's mind is what's going on with the crypto markets. We saw a pretty nasty correction over the past, week to 10 days. Had a lot of people super panicking, like, is the bull market over? What's going to happen to crypto long term? All that type of stuff. So we're going to look at that in this video. We do see some short-term, at least relief from the pain that we've experienced over the past, week to 10 days. So we're going to say, hey, what's the likelihood that this is a trend reversal? Is this a major fake out? All right, are we just going to continue on into a bear market after this? So we'll look at some probabilities of that, what my personal opinion is, and a lot of other really crazy news for crypto that's coming up down the right. All right, so before we get into that, if you're new around here, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to become a blockchain master step-by-step from start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Sorry, that's the button I meant to press there. So yeah, we got people jumping in the chat here. We've got, let's see, Culture Hives, Camjot, Gabrielle, Jason, Cade, B. Smith, Caleb, Frank, Eros, Flavio, Graham. Welcome. Kevin, Paras. So let's jump into this first major item of business here, which is what's going on with the crypto markets. Are we seeing a recovery here? Are we gonna, continue going down from here into a bear market? Let's look at this. So let's start off with the crypto prices for the top coins here. Let's start with Bitcoin. Sorry, my web browser's getting kind of crazy here. Let me just share my screen. So let me pull this over. So for Bitcoin and others, right, you can see the last 7-day chart here. We sort of bottomed out right here. You can see the same pattern across pretty much every single coin. I mean, the entire crypto market basically was doing the same thing. We lost about $1 trillion in market cap in about a week. It's one of the worst corrections we've ever seen in crypto history in terms of percentage loss and also just total amount. So let's take a look at Bitcoin here. All right. So we're seeing some relief off this, right? We've basically seen some 32 up to 40. You saw a pretty major relief here. Now, this got some people concerned. Is this a relief rally? Is it just a fake out? Is it giving basically traders and other people a chance to make some gains off the bottom so that they can sell a relief rally and then, completely get out, or maybe dollar cost average out while we go into a bear market or something like that. So that is definitely one possibility on the table. But one thing I really want to look at here that I think is relevant to this conversation is what happened yesterday. Because first of all, I made a video yesterday talking about a major problem for crypto. Just go check that out if you haven't already. And in that video, I talked about how basically crypto has a major problem that has to be solved in order for this long-term experiment to really work out. We talked about decentralization, why it's so important. But one really major part of crypto is basically a central point of failure, which is individuals' influence on the actual price of the cryptocurrencies itself, specifically Bitcoin, et cetera, right? So we talked about the solution for that is, of course, the market cap of crypto getting bigger, capturing a larger part of the overall money supply, what's happening in finance, all that type of stuff, because when the market gets bigger, it's less prone to these types of volatility. But, whenever this big dump happened, pull up my screen here, back when we were here, over the past, let's just pull up on a 14-day chart, sometime around in here, we did see a lot of major FUD happen. And of course, we saw a lot of comments from, Elon Musk, the man who has developed a love-hate relationship with the crypto, or at least crypto has developed a love-hate relationship with Elon Musk. Of course, I like when he says really bullish things about Bitcoin when the price is lower, about how Tesla buys $1.5 billion of Bitcoin for their balance sheet. And then we start to see the energy concerns come out around the at least local top of the market, and the price subsequently falling. So in that video, I talked about how, the crypto markets, of course, are over leveraged, or have been at least, and probably still are to some degree, and how basically there's structural problems in the marketplace. So any small amount of FUD or any small amount of bearish sentiment from somebody who has really strong influence can move markets because they're so fragile in the first place, at least to the downside when they're over leveraged like this. And I just got lots of comments in the video saying, "Oh, it had nothing to do with it, nothing to do with it." Well, just like anything else, like there's rarely ever one, single cause as to what happens in these crypto markets. But I think at this point to say that, his influence on the crypto markets has no impact at all is not really acknowledging what's happening out there. Because yesterday we saw a lot of bullish things come out from Mr. Elon Musk here, and we saw it was basically timed at this point right here. Basically yesterday we saw a lot of bullish news, bullish comments come out from Elon, and that basically coincided with this relief right here. Okay, so it doesn't seem to be like sheer coincidence. He clearly has an impact on the price of Bitcoin alone, which is a pretty significant amount of power because it's such a crazy market cap. Like, it's hard for any one person or individual to have that much influence. Now you could say, okay, take it further than that. Like maybe there's some, maybe there's some coordination bigger than just one person out there. Yeah, sure, you could go down that rabbit hole for sure. Either way, seemed to have an influence. So let's look at the drama that happened. So let's pull up my screen here. So this was one of the main things that came up was spoke with North American Bitcoin miners. They committed to publish current and planned renewable energy usage to ask miners WW to do so, potentially promising. Okay. And then we also saw this follow-up from Michael Saylor here, MicroStrategy Bitcoin bull for kind of famously kicking off the institutional, or at least publicly traded companies holding Bitcoin in their balance sheet, kind of kicked off that trend, and it's been a loud spokesman for it. And he followed up with that. So yesterday I was pleased to host a meeting between Elon Musk and the leading Bitcoin miners in North America. The miners have agreed to form the Bitcoin Mining Council to promote energy usage transparency and accelerate sustainability initiatives worldwide. So a lot of this is in response to, the energy debate around Bitcoin. That's been the FUD about it. So, again, if you're new here, FUD is fear, uncertainty, and doubt. So basically, there's a lot of fears about energy. Bitcoin requiring too much energy, not being green, and there's even debates on whether that's true or not in the first place. But really, what matters in the marketplace is at least the public perception of that. And that's kind of what they're fighting against here. Is basically say, we're talking about this. And it's no accident that we're seeing this news like after a price correction like this, I don't think. So that's what's relevant to know yesterday. And this had, this clearly coincided with at least a short-term reversal in price. I don't know if it's going to be like the bottom of this retrend necessarily for the long term. We could see this could be a dead cat bounce people talk about, where we have a relief rally, people sell it, and then we go into a bear. Honestly, the sentiment that I'm seeing across people who are kind of been in crypto for a long time is kind of split. It's kind of mixed, almost like 50-50, maybe 60-40. And so we can look to see like what does the social sentiment look like. I like to look at the crypto, or at least the Bitcoin fear and greed index. So yesterday, or at least over the weekend, it hit like an all-time low. Maybe not historical all-time low, but yesterday, we were in extreme fear yesterday. All right. We're still in extreme fear, but like we were in dark red extreme fear. This is one of the lowest values I've ever seen this metric go to. And I think it makes sense because it's the nastiest correction I think at least I've seen in my crypto lifetime in that short of a period of time in terms of percentage drop and also, of course, total value drop. So I think this is what's got a lot of the people who've been here. I think that's why we have such mixed opinions for people who've been here for a long time. And then also, if you're into TA, like I said, I'm not a very skilled TA person, but I'm from basic TA, like it doesn't look like a bullish chart. You know what I mean? When you see something do this, right? But at the end of the day, you have to zoom out. Have to think about what's actually going on underneath. So for me, like you're talking about yesterday, For me, nothing long-term has changed about crypto. Of course, this is not financial advice. I think I forgot to say at the beginning of the video, of course, nothing in this video is designed to convince you to buy or sell any cryptocurrency based on this information. Of course, I'm mostly focused on the technology here because part of my thesis is you build useful technology that uses cryptocurrency underneath, that actual value can accrue to those crypto assets themselves, okay? That basically, because crypto markets work upon supply and demand, and the more you build technology that has actual utility behind it, actual usefulness, that requires people to use cryptocurrency in order to interact with that technology, and they get a benefit there that they can't get somewhere else, that will cause the price of the actual cryptocurrencies to go up over time. Now, we don't have good models to understand exactly how much. We don't really have good models that say, oh, these factors make crypto prices go up 10x, something like that. My whole thesis here is that over time, as this gets more useful, that it's going to go up because there will be demand for it, and it's going to go up a lot faster compared to other things that I could personally invest in with this amount of money, okay? And a lot of that simply got to do with market cap. When you have something that's still this low in market cap, the percentage returns can be a lot higher, okay? And that's one of the reasons I stick primarily to things like Ethereum. Number one, I understand the technology, I understand where it's going, I understand why people would want to use it, hold it, and that would have that value accrue to the actual asset itself. And also things like Bitcoin, because it's to the test of time, is because there's this great trade-off of having a pretty large market cap to where if I hold it for a long period of time and we actually do go into a bear market, that I don't expect it to get absolutely decimated by some of the really speculative projects. So this is why I really don't go out and try to find like 100x altcoin gems and like hold on to them forever, because you might be right about a couple of them, but here's the thing, like if we do go into a bear market and crypto is this game of musical chairs where like when the music goes off, everybody's fighting for a small number of chairs, I don't want to be holding those coins, okay? Like I want to make much more solid bets with a larger amount of money and, go where I have an informational advantage to see where this space is actually going and stick with those things. And that's largely what I try to cover on this channel because A, it's where my expertise is, and it's where I feel like I can actually add value and help you all see these types of things too. And so, I just try to tell you what I'm doing long term. Personally, I've sold nothing. If we go into some sort of bear market and this is actually a fake out, maybe it's sort of I still really don't see a good reason why it would be this massive, bear like we saw in 2019, or sorry, like 2018, 2019. That thesis could be invalidated. We could absolutely do it. But even if we do, I still have a long-term view of this. And at this point, with the level of returns that we've had, not quite meeting people's expectations. If we topped out here, I would just hold throughout that entire thing. And a lot of that's also got to do with, I don't need that money right now. So that's my take on it. And I mean, another reason I'm so bullish on this space is it's caught so much attention of really major people. We talked about this a little bit yesterday, but I want to revisit this clip from, Goldman Sachs. Goldman Sachs is calling cryptocurrency, we're looking at cryptocurrency as officially a new asset class. Okay, so we saw this, come up yesterday, or I guess it was, let's see, was it yesterday? Yeah, yesterday. At least Yahoo Finance is reporting on it. So Bitcoin is officially a new asset class. Goldman Sachs. I mean, that's crazy, right? How can that not be bullish? We see an excerpt from this too, talking about, in response, they still talk about the crash. Of course, they're trying to get clicks, but they say the leak, the Goldman Sachs prediction gives high chance that Ethereum will eclipse Bitcoin. Okay. So Goldman Sachs, their personal thesis is there's a high chance that Ethereum will eclipse Bitcoin. So here's the crazy thing. If you've been watching this YouTube channel, since we started doing these live streams and really heavily covering these topics, I started covering these topics pretty heavily kind of at the end of 2020, beginning of 2021, because that's where all the attention started going. People wanted to learn more about the fundamentals of the technology. And what is Ether doing? What is this long-term potential? So when we started covering Ethereum so much, you've been able to front run this opportunity and hear about this stuff before people like Goldman Sachs start talking about it. So when you get into these opportunities and you front run, like you're front running major money. if you're listening to this stuff and understanding the technology, getting this informational advantage before you see somebody like Goldman Sachs put this report out, because when Goldman Sachs puts this report out, guess what's going to happen? Wealthy people who trust Goldman Sachs are going to start really thinking about this possibility and where should they be going for hot new opportunities that have massive upside potential over the long run. That's just what they think about. Social proof is really important for everybody. It's important for people who are young. They see what their peers are saying, but people who are like, way further advanced, people who are wealthy, they say, hey, what are our peers doing? You know what I mean? And they listen to people who they have who have authority to them, and that's how it works. You know what I mean? But we get to see here and see this stuff before everybody else does, and that's why I'm still so bullish on the space, because we're seeing more and more people start to wake up and realize the things that we've been saying for a very long time, and that's what makes me even more long-term bullish, is because people are resonating with our personal thesis. So more evidence of that is here with, we talked about Ray Dalio yesterday, talking about how he says, I've got some Bitcoin. Now, some of this was like taken out of context. It was like just a really quick mention in an interview, but it's still a huge admission from a legendary investor that a lot of people, listen to what he says. It's sort of like Warren Buffett. Anytime Warren Buffett says something, you have sort of like a personality cult that sort of just like latches onto whatever he says and takes it as gospel. People tend to do that for leaders, right? I'm not saying the leaders necessarily encourage that. That's just sort of human nature. That's what they do. But these types of people have really strong influence about what people do in finance. But anyways, we talked about billionaire Ray Dalio, legendary investor, hedge fund guy, talking about how he's got some Bitcoin, but he also talks about the possibility of preferring Bitcoin over bonds. Now, some of this was taken out of context, right? You kind of see the headlines say, Ray Dalio says he'd rather have Bitcoin than bonds. But what he says here is the more he creates savings, in Bitcoin, the more you might say, I'd rather have Bitcoin than the bond. And in that case, I guess that's what he's saying here. Personally, I'd rather have Bitcoin than the bond. And a lot of this has got to do with like bond yields and what's been going on, and that they're terrible. And I've talked about this a lot. And that's one of the reasons that DeFi has been so attractive. When you can actually, create yield farming opportunities to lock up assets and get competitive yields that you can't get anywhere else, it captures the attention of people who know what they're doing. I mean, that's going to capture the people of legendary investors, people who are legendary figures in finance. Like, they get it. You know what I mean? Now, I'm not saying that Ray Dalio here is talking about yield farming. He's talking about Bitcoin itself, but the next logical step from that is other crypto technology that provides benefits that you can't get in the traditional financial system because of the technology that is actually powering it. It allows you to automate away things that you can't do in traditional finance, like borrowing and lending, and creating a much more narrow spread inside of there to get those kinds of returns. And so, basically where I was going with that is, you're going to see very smart people realize that this provides a benefit that people are going, that they are going to want, and B, other people are going to want, which means it's a massive opportunity for those who haven't discovered it yet. I've always talked about how competitive savings rates are a killer application for blockchain technology because they provide a benefit that most ordinary people can understand, who don't participate in finance. I mean, DeFi, so finance is a game like that honestly a really small number of people in the grand scheme of things understand and participate in. I mean, when I say finance, I mean participating in stock market, anything like that, right? Most average people don't really do that. Maybe they might have a 401k or something like that, but they don't really get into like anything beyond that. But almost every average person understands that a low interest savings account like what we have right now, historically just terrible rates, like that's not good, and they prefer something much better somewhere else. And so if you're to show an average person that you could get 10% savings rate on just cash, just US dollar stable coins, then that's a no-brainer to them. Now, to everybody watching the stream, I'm not saying like go out and liquidate your bank account and put it into stable coins, right? Because there's still risks to that, especially early in the game like this. But I do expect those things to get much safer over time and to come out with better solutions on how to make this a more viable option to ordinary people. But what I'm saying is that's the long-term potential of this technology. That these are reasons why people will use it over the long term. And what's actually providing those yields underneath is other crypto activity that requires people to use the cryptocurrencies themselves. And that's why I see demand for this technology increasing over time. And then that value actually accruing because of demand side of things to the crypto assets itself. And of course, talk about ETH becoming deflationary potentially as EIP 1559 launches. As we do see ETH supply getting burnt throughout these periods of sustained activity. Well, for any activity, but through periods of sustained activity, we could see the total burn exceeding the new ETH issued, which could make it deflationary over these long periods of time. And so if you have, things like increased demand for the technology, ETH fee burn, it's just a crazy, crazy thing. And so for DeFi technology too, we've seen it majorly stress tested over this past crash, and it makes me even more bullish on this space, particularly what's going on in Ethereum right now, because I talked about this before the other day, but I have a thread pulled up here that I want to revisit, which was in 2020, in March 2020. We saw the major dump that happened everywhere, happened across stock market, happened across crypto markets. Of course, there's the world events that were going on that year. I'm not really supposed to say in the videos, but the world events that were going on, everybody was in panic and in fear. And, DeFi, it did okay, but it definitely had some problems during that time. All of crypto did. And of course, during this last major dump, we saw a lot of centralized crypto exchanges experiencing difficulties. But DeFi largely performed well. And I want to revisit this thread here that I think is a really good take on that, and also makes me more bullish on that particular technology and that value also accruing to DeFi projects as well that are particularly built on top of Ethereum, just because that's where the majority of DeFi activity is happening on right now, the vast majority. So let's look here. This is from Raoul Paul. Of course, we talk about him a lot on this channel. Has had a lot of amazing takes on this whole trend ever since it started, and I think has a really good pulse on where everything's headed. So something to get your head around. They had a headline here, and I think he's just kind of paraphrasing. So a major asset class crashed 42% in 14 days. I'm about crypto, wiping out, about $1 trillion in value in an orgy of liquidation of people up to 100%. Or 100 times leverage with very low regulation. Many tokens fell up to 70%, including unregulated lending and borrowing business. Okay, so he's basically talking about how the headlines are basically trying to smear crypto and point out all the negative things that happened. But he's going to turn around and talk about actually the really bullish, good news that's not really talked about. That doesn't get as much attention, doesn't get as much clicks, but it actually reveals truth of the underlying system, which is beneath the headline. Crypto had a major, Varshock test and nothing happened. Leverage liquidation was offset by over-collateralization. That's exactly what we do in DeFi. No one was left holding the baby. No firm went underwater. The Fed didn't need to step in. DeFi didn't break and carried on near normal. Okay, so it's contrasting that to the other blowups that we have in the traditional financial system where you see firms go underwater, you see banks go out of business. The Fed didn't have to step in, all this type of stuff. DeFi did what it's supposed to do. It says no daisy change of collateral losses. There was no collateral pressure. Stable coins remained stable, relatively. A few exchanges went down for an hour or two. No exchange, big losses. So basically, he's just saying this was huge. This was majorly bullish that this was stress tested, and for the most part, we came out relatively unscathed in terms of technology on the other side. Of course, we had some hiccups, but it was pretty good for the amount of stress that we incurred. So he's saying he saw first all crypto back in 2012, a new anti-fragile financial system that doesn't break in times of stress, where ownership of assets is clear and losses are not mutualized to taxpayers. This is really important. So this was a big 2 weeks for crypto and for the future of the financial system. And I resonate with that with 100%. We came on the other side, and this is why, despite what's happening with the price, I'm bullish, continuing on, because the price is gonna the price is going to follow, in my opinion, as we continue to build this out for all the reasons I talked about in this video. And of course, the major opportunity here, that I have jumped on for this is definitely, getting into the blockchain industry and helping build this, tech talent, being tech talent to help build out this stuff. I mean, it's insanely high demand. It's incredibly hard to hire skilled blockchain professionals right now. So even people who are just like getting into the game, I mean, it's absolutely crazy. I mean, price is the best marketing for cryptocurrencies. It's one of the reasons we talk about it so much on this channel is because it's just what people want to talk about. We see, I watch Google search volume absolutely explode anytime something happens with cryptocurrency prices. And that's the same thing. It catches people's attention who want to build businesses in the blockchain industry. And so whenever price goes up like this, they treat that as confirmation that the technology is actually working. They realize that other people are using it, and they want to build projects. And people who have the skills, they don't stay on the job market for very long. I'll put it that way. So we're seeing more and more also for central bank digital currencies. Talked about this a lot. Talking about my view on central bank digital currencies, that I'm not a huge fan. There's a mixed review on this. Some people say central bank digital currencies are bullish for crypto because they give crypto legitimacy, basically saying that it's an acknowledgement that crypto can't be controlled and that governments have to jump on this train in order to stay relevant. Of course, we do see pressure like that coming out here. So we see this. The rush is on. Who wins the race for CBDCs? The Federal Reserve governor believes that the U.S. must be a pioneer in the central bank digital currency space to maintain the global popularity of the dollar. So they realize that, that's where the world is headed, and they're talking about the pressure to do this in order to stay, on top. Now, what is a central bank digital currency if you're just tuning in and you don't understand? I talked about it on my channel recently because we're seeing it so much more. Basically, it's a digital currency that's controlled by a central bank. And it's kind of just saying the word to define what it means. But, basically the central banks, at least in the United States and other countries as well, are essentially the banks that control all the other banks. They control the money supply. When you hear about, money printing, all that type of stuff, that's essentially who's responsible for it. So a central bank digital currency is a digital currency issued by them that people would use. And one of the reasons I am not so hot on central bank digital currencies is because essentially it's kind of an anti-crypto. Cryptocurrency was created to sort of be a sovereign currency that transcends nation states. It's borderless. It's global. All that type of stuff. And a central bank digital currency is the opposite of that because it's for specific, countries. It's got central point of control. It's not decentralized by any stretch of the imagination. It's kind of an anti-crypto in that regard, and I could see it mostly being created to just, maintain a greater sense of control and transparency, or at least insight into what you personally do with your money than what we currently have. Because think about it this way: if you don't have a bank anymore, and you just bank with the Fed, and you have a Fed account instead of your local bank account. I don't know what everybody else uses for a bank, but let's just take some common examples in the United States because that's where I live. Like Bank of America. If you bank at Bank of America, what if you stop banking at Bank of America and you start banking with the Fed and you have a Fed account, right? If you get a tax refund and they say, well, you got to claim it from your Fed account. You know what I mean? So they force you to sign up for a Fed account in order to or you get a stimulus check. Well, you got to claim it for your Fed account. You know what I mean? So it's like sort of forcing you, or at least incentivizing you to sign up and get a Fed account. And then whatever you do with your Fed account is issued in digital currency, and everything you do with that digital currency is tracked in a way that you can't track like cash transactions. You know what I mean? So of course anybody who had enough power could get your bank records, because your bank and your credit cards, everything you make digital transactions on can be traced. And so anybody who could buy that data would have insight to that. But even if you remove that layer and you start talking about digital dollars where they have a ledger of everything, and then also control over that ledger, like what happens if somebody just says, oh, I'm just going to delete your balance? You know what I mean? Yeah, not my thing. So we see this take also as well from, let's see here. It says, Senator from Mall here. Essential bank digital currency, CBDC, is the opposite of a cryptocurrency. That's exactly what I say. It's like an anti-crypto. It's the complete centralization of money with no intermediary banks or monetary instruments under all-seeing state. Yeah, that's basically what I just said. So there's gonna be any questions here in the chat. Somebody says the Fed coin will get hacked. It could. So is there a way to invest in optimism layer 2 solution for ETH? So not right now. Okay. So we got to make questions here. So how do you imagine layer 2 scaling? Sorry, this chat keeps moving. How will you imagine layer 2 scaling solutions will affect Matic? That's a good question. Time is gonna tell, you know, when layer 2 scaling solutions kind of come out in full force, are we gonna see people still demand side chains like Matic? Now, I think that they're basically trying to get ahead of this problem because, you know, Polygon is what Matic is now. Matic turned into Polygon. We're starting to see them kind of their strategy being a multi-pronged strategy for scaling Ethereum, and trying to position themselves as like a partner for Ethereum. So there's a good chance that it becomes less relevant as roll-up technology becomes preferred, whether that's optimistic roll-ups or zero knowledge roll-ups. So time will tell, you know. It's something you definitely have to think about. Some people says that proof of stake can fail for ETH. Don't people do network testing? So proof of stake will definitely, that's going to be the merge part of Ethereum 2.0 migration. It will be heavily tested. Yes, don't get anybody wrong. But it's just like everything else, right? Like, you know, like have you ever seen a rocket ship take off, like a SpaceX launch or something like that? Maybe that's the modern day equivalent. But if you ever looked at any, you know, past, moon missions or something like that, where everybody's literally sitting around the launch pad, you know, some of the smartest people in the entire world, some of the highest paid people in the entire world are literally have put all this time and energy to making sure that a rocket ship goes off. And we're like pretty sure it's going to go off. And then everybody's still kind of sitting around there with their fingers crossed going like, okay, I hope this rocket doesn't explode whenever it leaves the launch pad. And that's kind of like what it's going to be like for ETH 2.0 merge. I mean, it's just the reality. Everybody does everything they can to ensure that something is going to go off successfully, but everybody right before it happens, they're still like, all right, let's just make sure. So I don't anticipate any problems happening, but as an engineer myself, and as someone who's watched very complex things, you know, come to life, there's always this tiny degree of uncertainty that you're just kind of like, all right, let's just hope it works. But I expect it to work. You know, I expect it to work. And if there was any type of problem, you know, it could be like short-term bearish, but I don't see any good reason to think that it'd be a long-term issue. All right, everybody. So that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so the more people can learn about blockchain. If you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you how to become a blockchain master step-by-step from start to finish over at dappuniversity.com/bootcamp. All right, you don't have to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.